Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
Good morning, everybody. Well, it's Monday. Hope you guys had a good weekend. I think that this week could be a little wild. Although maybe last week was most of the drama. I don't know. Let's see. Let's go to the charts, review what happened, look at where we're at. So here in the Treasuries, the non-farms payroll was double the anticipated number, and holy crap, did we have a huge decline. And I didn't even get a good spot, and it just kept going. And now here you can see in the overnight session / weekend, we are a little bit lower, and we have Chairman Powell continuing to say on 60 Minutes that there is unlikely to be a rate cut in March, as well as several Fed speakers talking about it. So the trend for the moment is down in the Treasuries. And if we come in here on a daily chart here, you can kind of see we are, I mean, that is a pretty big shift in trend, but we aren't quite breaking some of the support levels on the downside. So there could still be some room to go, especially if they do break these levels and they just keep going. Here is the S&P 500. Okay, so the S&P 500 got hammered really hard by that non-farms as well. But I guess they decided that it was positive enough to wash out the negatives from the higher interest rates, and the S&P 500 ended up higher, believe it or not. I'm actually a little surprised that not only did they dig that out, but that they extended higher. Equities are just crazy. Now, part of it may be that oil just continues to struggle, man. I mean, it's good. We kind of want oil low. That's good for the economy. This is good for our foreign policy. But I continue to just be flabbergasted that oil just cannot seem to build up any kind of positive price action. It just continues to be in the dump. And it's like we stopped selling from the SPR, didn't we? I don't know. I guess the big thing is that China growth is just like dead right now. Their economy is just in the dumps. You got silver and gold get hammered because of the interest rates. Copper also getting hammered because China's selling continued overnight in China. Donald Trump said, we're probably going to do a 60, or somebody asked him about 60% tariff, and he was like, oh, I think it'll be higher than that. And all the Chinese stocks sold off, right? So interesting thing about that, though, I guess, is that the market seems to believe that Donald Trump is going to be president at the moment. I'm not convinced that the polling actually shows that yet, but we'll see. You know, by the time Labor Day comes around, we should know. And then here you got the dollar getting stronger above 104 this morning. And Bitcoin's doing okay. So Bitcoin seems to have disconnected from everything else over the past week, which I think is a good thing for Bitcoin. I mean, it's kind of been doing its own thing for a while. But if the whole play here is that you'll continue to see inflows from the ETFs and so forth, then that's, I think, exactly what you would want to see. So that's good for Bitcoin so far. All right. Good morning, Jiwi, James, Tactical Tenacity, Octavius, and Don. Not Don. Yeah, anyways. Let's see here. James Talks says Friday yields up, dollar up, S&P. Yeah, that it is a little weird to see the S&P 500 up with the dollar up and yields up and everything. Now, I kept one contract on, and it has made an additional $600. How are you guys liking the idea of swing trading momentum, huh? It's not always going in the treasuries, but when it goes, whew, ooh, baby. goes. So, I was reading this post that somebody posted in futures trading. I thought was very interesting because it says many things that I think I kind of like maybe knew intuitively, but not explicitly. And I think that this kind of helps us understand why these things are so. And so I think it was very worth reading. So this guy says, 4 life lessons I learned while studying statistics. Number 1, false positives versus false negatives. Fewer false positives often come at the cost of more false negatives and vice versa. So then they have a picture here. Here's the true negatives and here's the true positives. And then here is this like crossover point. And they're basically showing you that wherever you put your positive test cutoff value, it basically, the more false positives that you're canceling out, the more really good positives that you're maybe getting rid of too. Which I've noticed in my stats that it's like, okay, so I have this filter and I think it works pretty, I have this setup rather, and I think it works pretty good. And so I'm going to try and add this filter on top of it to see if that will improve my win rate or something like that. And it never does, because the more negatives that you filter out, the more positives you also filter out. And unless you can get it so that the negatives that you filter out are really big and the positives that you're filtering out are really small, it doesn't help you, right? The less stringent your criteria, the more crap you need to deal with, but the more stringent your criteria, the more genuinely good stuff you miss out on. Missed opportunities is the price of never wasting your time. Wasting your time is the price of never missing an opportunity. Overfitting versus underfitting. Less flexible models can't fit the data. More flexible models are prone to picking up patterns that don't generalize. Life lesson: overthinking makes you more vulnerable to seeing patterns that aren't there. It turns you into a misinformation machine. Yeah. Bias versus variance. More complex models give less consistent answers. Less complex models give more biased answers. Life lesson: there's a natural trade-off between nuanced thought and consensus. People get mad when experts disagree, especially when non-experts don't, but that's actually what you would expect. Okay, curse of dimensionality. Given a fixed amount of scenarios to learn from, there's a point beyond which considering additional factors stops helping. So if you haven't experienced much, keep things simple. Nuance without experience is actively harmful. Summary: the common theme I see is these are cautionary tales for overthinkers like me. There are hard mathematical limitations on what we can possibly know as rational beings. There's wisdom in knowing when to think, but there's also wisdom in knowing when to stop. Good thread. Like that. How do I like that? How do I want to like it? Oh, there we go. Add reaction. There we go. All right, moving on. Brannigan Barrett, if only you knew. Who is he talking about? Kashkari, data on the economy is not unambiguously positive, with some signs of weakness, including rising consumer delinquencies. Interest-sensitive sectors of the economy are holding up well. Core inflation making rapid progress towards the Fed's target. Higher neutral rate means monetary policy may not be as tight as thought. Higher neutral rate means monetary policy may not be as tight as thought. Possibly higher neutral rate means the Fed can take more time to assess upcoming data before beginning rate cuts with less risk to the recovery. Brannigan Barrett says, oh, what? If only you knew how big this is. Do not discount what he is saying because he isn't a voter. The Fed has told us they cannot understand why they are able to hike rates at the fastest rate in history and not break anything. Well, there is your answer. Rates are not restrictive. Long bonds go bye-bye. Okay, so he's saying higher interest rates, particularly on the long end. Well, the long end is lagging today. If any given trade can end up in one of four possibilities, big win, small loss, big loss, there should be a way to filter out any of those four possibilities. I mean, how do you know? How do you know? Like, the thing is, when it comes to markets, is find me something that just find me a piece of data that effectively predicts whether something is going to be a winner or a loser. Like, just finding that is hard. Find me something that can predict whether something is going to be a big winner or a little winner. That's really hard. So to do both of those two things at the same time, I don't know what filter you got that's doing that, but like, that'd be mighty impressive if you found one. Peter St. Ongi, PhD, retweeted by Jimmy Euro. Bloodbath of the layoffs in mainstream media as 20,000 fake news activists must now learn to install drywall. What's driving it? A collapse of trust. A record 40% of Americans have zero trust at all in corporate media. Instead, Americans are turning to alternative media. On Twitter/X, from Joe Rogan to Alex Jones. It's funny that they treat Alex Jones. Oh, Peter St. Ongi, I don't like this guy, actually. I know who this is. Okay, he's right about some things, but he spreads a lot of bullshit, too. One of the things that I find so incredibly frustrating is that when it comes to financial news, it's very difficult to find conservative financial news commentators that like understand what's going on and aren't full of crap, primarily because I think that they are all anti-Federal Reserve, you know? And it seems to me that if you don't believe that the Federal Reserve should exist, that ends up being like a huge barrier towards you understanding anything else about the market or the financial system. I didn't say I have one, just that there should. But what makes you think that there should be one? I know it seems like that there should be one, but I'm kind of starting to wonder if there actually isn't. I think that there is so much randomness in the thing we're talking about. The markets or whatever it is, so this can apply outside markets. I think that there's just so much randomness to it that, you know, there are significant limitations on what you can actually predict. There should be a world where I'm rich. Maybe there's an alternative universe where you're rich. Maybe. But anyways, the thing that interested me about this Peter St. Ongi, I don't know how you say his name, is that he says, oh, they're going to have to learn how to install drywall Because one of the things that I'm noticing happen culturally is that, like, there's like this breakdown of the social contract. Everywhere you look, the traditional social contract that we have is breaking down. The social contract that you have between men and women is breaking down. It's particularly apparent in South Korea. So if you look at some of the stats coming out of South Korea, men are becoming significantly more conservative, and women are becoming more liberal. And you're seeing this across the developed world, but it's particularly strong in South Korea. And why is that? Well, one of the factors, or one of the things that's unique about South Korea, apparently, and maybe playing into this, is that you have mandatory military service in South Korea, right? Because technically they're still at war with the North, right? So all of the men have to go into 2 years of mandatory military service, which is a big deal. Like, that's a huge, that's a significant amount of time that you have to take away, right? And it's so, like, this shows up in StarCraft all the time, right? Is like right now, Flash is, I think, just completing his military service, and maybe might come back soon. He's the strongest Brood War player. You have to take 2 years off, right? And the women don't have to do that, right? So the contract is the men, they have to do the military service and the hard labor, and the women have babies. And what's happening is the women are choosing not to get into relationships and not to have children, and instead are taking that 2 years that they don't have to go into military service, and they're using that to bump their careers. And so these men are kind of at a natural disadvantage to the women because they're 2 years behind in their careers. And so the men are very resentful about that. And like I said, it's a breakdown in the social contract, right? I think that there is also a breakdown in this social contract that we make with working people, right? Because I think what we say to working people, or at least, and I don't know if this was necessarily ever true, but it's what people believe. It's what people believe is that if you work hard, that you will get rewarded for it. That's what people in the United States believe, and that's what working class people believe. So they think that if you go out and work yourself to the bone, that you should be successful and you should have a relatively good life. And you might not be like a millionaire, but you should be relatively happy. And what's happening now is that we are flooding the market with low-cost labor. All of those kind of working class jobs, like if you wanted to work on a farm, like maybe you enjoy, there are people out there that enjoy working on farms. There definitely are, but guess you don't get paid squat for that. You don't get paid squat for that because there are so many workers that come up from Mexico that are willing to do that work. And so that keeps that cost of labor extremely low. You ever know this, this whole thing where like the US subsidizes farming, right? So because otherwise food would be too cheap. So maybe there is some room for like the cost of labor in farming to go up, right? You're breaking the social contract with it. So everybody used to say, learn to code, right? And now that the big tech industry, at least the Googles and the Apples and so forth, have had like massive layoffs. Everybody's in on this narrative that like the gig in tech is up, and so you need to go into something else. So what do you need to do? You need to go into the trades, learn to put up drywall, become an electrician, become a plumber, etc., right? I don't think so. I mean, if it's very skilled labor, like an electrician, but that's going to be something that takes you like 10 years to build up. And then to really make the big money, you're going to have to be running your own business, right? But in the meantime, like, manual labor gets paid squat because we're importing so many people. And I think that importing so many people is having an impact, is probably having a positive impact on the economy too. Kind of a weird thing. So, well, that's going on. That's an interesting thing to look at. Even though I don't completely agree with this guy's view of things. Even BTS members had to go. Yeah, yeah. The dollar. I mean, having the dollar up above 104 now is pretty significant, isn't it? That's a pretty significant break for the dollar that the other instruments haven't done. Nassim Taleb reposts, education is an institution that has been growing without external stressors. That's an interesting way of thinking about it. There are some problems in education. Oh, by the way, I'm just remembering that kind of had some weirdness over the weekend with some of my work systems. So I kind of need to keep an eye on things over here. Okay. I think they're okay for now. Out. There's somebody here on Twitter promoting an AI that learns from your trading, and I'm like, They've had a lot of problems getting machine learning models and so forth to translate to time series models and things that would be useful for trading. Of course, there are like niche scenarios that are really, really beneficial, especially at high frequency trading. But so somebody's saying that they're using a ChatGPT like thing for that to retail traders. I'm extremely skeptical of that. Elon Musk. Okay, Elon Musk is talking about the immigration thing a ton. Which, have you noticed how much it seems like people care about it? Like, it seems like the talking head people and politician type people are really noting that Elon Musk is talking about all these things and trying to like get them into people's consciousness. What if we reach a level of technology where all of the farming is done by robots and is both cheaper and faster than hiring a human? Well, then you would have to hire a human to maintain the robot, right? It would make the farmer the guy that owns the farm more valuable, but it would also make his job harder. He would probably need people to help him maintain the robots. But then your job would be a robot maintainer. Right? The trend always ends up being that you move to higher value labor, not that labor disappears. All right. The future is pill food. Dude, you know, like this whole thing with certain people from the World Economic Forum I don't want to make it like a thing like the World Economic Forum has like a outright policy prescription or agreement on this. You got to remember that it is a forum. But these guys that are pushing bug protein, it's absolutely crazy. And like I don't know how serious of a thing it is, but like politicians are passing laws and stuff, right? Like this weekend, I think it was over this weekend, Florida passed the law that basically outlawed synthetic meat and that sort of a thing. Because the concern is that they're going to start putting this bug stuff in your food, and you won't be able to tell what has it in it and what doesn't. Because that's kind of what happened to our food anyways, right? Like we fortify all of our food with folate, for instance. That's in everything. So like if there's problems with our food in the United States, like glycophosphate on the foods or whatever the deal is, it's everywhere. You can't get away from it. You can't get away. You have to go to Europe, basically. There's all these people that say they go to Europe and they feel better. So if our food supply gets, let's say, infected with this synthetic meat or bug proteins, you won't be able to get away from it. You won't be able to get away from it. But everybody's like so already on top of it, which is kind of comes back into, is it actually a real concern? They'll impoverish the planet to do it. Yeah, the issue here is that I think that it is like a very niche, small group of like billionaires that are pushing this all on their own. Like there's not really widespread popular support for it. People act like the World Economic Forum is a monolith. It's not. But there are definitely people that are part of the World Economic Forum pushing these things. And they've got the money and they can get really far with that money, you know? Farmlands of the heartland are you losing the nutrients of the soil entirely? Well, yeah, but that's always a concern in farming. They want to push people out of farming so they can gobble up their land and slap wind turbines and solar panels on them. Oh, maybe. I think that when it comes to climate policy, that these politicians... Okay, let me back up. I think that a lot of politicians are effing stupid. Okay? These politicians, they are not that super smart kid that just excelled at everything and, you know, is really smart and sharp and thinks of every angle and yada, yada, yada. No, it's not. It's that kid that kind of skated by because of his upbringing, right? And I think that there are a lot of people in places of power that are not as critical of thinkers as they think they are, that are not as good of planners as they think they are. And they'll come into an issue like climate change and they'll say, okay, this is an existential threat to humanity. It's not, but okay. But it's happening and it's an existential threat, so we need to do everything that we can to prevent it. And so then they go down, okay, the thing that can save us from carbon emissions, cars pollute a lot, so we need to have electric cars. So then they'll go down this road and do everything that they can to make electric cars a thing and think absolutely nothing of the secondary ramifications of it. And so then they'll turn around and start doing actively harmful things to other sections of the economy and not think twice about it. Because they get a one-track mind. And this is clearly happening with farming. That like fertilizer creates carbon emissions, so they're putting restrictions on fertilizer, and it means that farmers can't make enough food. And they're like destroying the farming industry. until like all of the farmers get together and protest, and then they're kind of, okay, maybe we need to shift a little bit. Like, it's crazy. It's crazy. And not to mention that the human's natural propensity is to pay more attention to concerns, right? Because that's how we've evolved. We are not evolved to live in a world of abundance. We're evolved to live in a world of scarcity. Yeah, electric vehicles, in my opinion, are not the future either. I think that Toyota is probably right, that hydrogen vehicles will come along, and that in the meantime, hybrids will be better. I think so. Like, it's just our electrical grid cannot handle it. You're just seeing more and more problems with it, right? You need lots of really rare earth minerals to make it work. They don't work in the cold. The electrical grid can't handle it. Most people don't have the infrastructure in their house for a full-on charger. This is one that people don't get. They argue with me about it. There's this thing on one of my most downvoted comments on Reddit was about this. But so when you're charging like your Tesla, you've got like 3 choices. You can use like just your regular outlet, just a regular outlet, plug it into your car, and that doesn't charge your car very quickly. Next, you can have one of those outlets installed that are like the same kind of outlet that your dryer uses. Okay, that's a little bit better. And I think that a lot of people, they get by okay with that. That, you know, like if they're not driving the car a ton, then there's enough time during the day to charge the car that it charges with that. But if you really want the nice charging station that you see all of these influencers like Linus Tech Tips and so forth installing in their garages, where you have the plug and you plug it in, or, you know, that is the same kind of plug that if you were going out and you were parking somewhere and you plugged into charge, right? To get one of those installed, most houses do not have the infrastructure to have one of those. And it's like tens of thousands of dollars to get that infrastructure installed. I thought we were done with Linus Tech Tips. You know what? That whole drama with Linus Tech Tips, I think, just kind of blew over. I think everybody forgot about it. Anything that carries with it a repair cost that encroaches upon 50% of the original cost of the vehicle will never be. Oh yeah, that's a good point too. That the repairs are really bad, especially when the battery goes or the electric motor goes. That are turning your cars into disposable things like cell phones. Well, I do kind of wonder. So this is something that I'm concerned could happen. And this is like, so I am not so concerned about certain rich guy thinks that we should all eat bugs, yada, 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 yada. Because there are systems that kind of work against that stuff. You can already see it. Nobody wants to eat bugs. And like, we don't really know what the ramifications of that are long term. And you're doing like this crazy experiment, right? And so maybe you go down that path a little bit, but eventually you kind of see, there's a problem. And then just like what we're seeing with electric vehicles, right? What concerns me more is when I see a particular microstructural system that might lead to a certain result. You get what I mean? And one that I am concerned about is that cars become like, what should we say, commoditized, right? Like it gets to the point where you don't own a car. You just order the Uber. They're you know, like a service that is Uber, but completely self-driven, right? So if you need to go somewhere, you schedule the car to come and get you. You don't have to go and pick the kids up from school or whatever, because the robot goes and gets them, right? And at that point, you have a system that kind of feeds in on itself, and it gets to the point where nobody actually owns cars. They just rent them. And then you can get cut off from that system at any time. Right? I think that's a real fear of mine, that I think it could happen, because I think that the way that systems tend to go, that would be the tendency, would be for it to go in that direction. Because why? Because the microstructure, right? My chicken eat bugs and I eat the chicken. Well, it's true. Dude, right? Indeed, we've known how to build a nice, solid, good dash in a car for decades, but all of these cars keep having cheap, horrible dashes that crack and fade within months. Dude, even the luxury cars have, dashboards and all of that sort of stuff that suck. Like, there's a whole thing when Porsche came out with an electric vehicle, and all of the influencers and stuff were like, oh, it's such a great car. I mean, it performs so great and it's so nice and everything. It's just that, like, the sound system and the dash and everything about that sucks. Right? Progressive white women will eat dog poo if a credentialed enough person tells them that it'll save something. Yeah. Well, the thing that I think is really crazy is that they're like replacing your dashboards, like the actual odometers and everything, instead of having actual, real instruments. They're replacing them with digital stuff, and there's a lot of people in the car community who don't like it, and I kind of agree with them. I think that it's going to make your car look really dated. That's what your new Mustang has. I was thinking about this yesterday too, because I didn't know that Ford has dramatically expanded the Mustang line. Like, there's like 12 of them now. It's like Porsches. If you get a Porsche 911, there's like 12 different versions of the 911. It's like that with the Mustang now. There's like a supercar version of the Mustang, and there's so many different ones. There's a hatchback version that apparently doesn't sell very well. I'm like, The entire dash is digital, 2 iPads basically. Yeah, I think it's gonna make your car look dated. Yep, the Mach-E is the hatchback. Yep. By the way, I haven't really commented on the Treasury market here for a while, but it's pretty tight here for Monday. We do have ISM Services PMI at 10 o'clock, so I'm thinking that the market is keeping itself tight until that. If they would have not named the Mach-E a Mustang, it would have actually been a good car, but they tried to ruin the name. Well, but this has always been a problem. This has always been a problem, because back in the 80s, there was like I don't think they called it the Mach-E. I think they called it like the Mach 5 or something like that. And it was a hatchback version of the Mustang that I thought was really cool, but like didn't sell very well at all. Yeah. It's just like, it's too off-brand for Mustang to be a hatchback, apparently. The most beautiful Mustang. Is it the Mach 1? No, that's not the one that I'm thinking of. Yeah, this hideous thing. That's kind of my thing. Like, I like a 80s looking hatchback sort of a thing, right? But that one's kind of ugly, I think. Hey, Paul, so no, screw. Okay, so you have to give me like the full thing, like the year and like the full name of it for us to look it up for what you think is the bomb. I didn't have any problems with my Mustang, but I also didn't drive it 30,000 miles a year. Yeah. What is that? 428 SCJ. Ooh. That's a real Mustang is what that is. Special vehicle operations. What? It is kind of funny though, like the way that cars are shifting, because everything's going over to the moving to the crossovers, which I'm quite surprised that companies are actually having a hard time selling sedans, especially a sporty sedan. Like the kind of cars that I think us in our 30s and 40s still idolize, they don't sell very well. That's why, for instance, the Toyota Corolla GR, the GR Corolla, they're very hard to get because they don't make very many of them, because they don't actually sell. If they made as many of those as you would typically make of a sports car or whatever, they would probably have a hard time giving them away. Mm-hmm. But then it's also like, because people don't commute into the city center as much. By the way, my camera looks overexposed. What's with that? No. Is one of my lights too? Oh yeah, that'll do it. That'll do it better. Much better. Let's see here. So we got 50 minutes. And at the bottom of the hour, we'll start to see equities going again. We'll see what they do. I think equities, given the recovery on Friday and everything, I'm going to be watching it a little bit more closely today. Make sure I understand what it's doing. I'm tracking my old car's VIN. It wound up in a salvage yard and it's being parted out. Oh, that's sad. Okay, what do you use the dollar index candle chart for? To watch the dollar index, of course. So the dollar is one of the most influential units out there. But almost everything has some degree of correlation to the dollar. And when big flows are coming in and out of the dollar, that will affect the other markets. So for instance, when you're seeing the dollar sell off, that is usually bullish for the equities. And sometimes you'll see these situations where like the equities are rallying really hard and like the equity traders don't understand it. They're like, there's no reason for it to be going up. Why is it rallying like this? This makes no sense. Well, it's because the dollar was falling. So you want to watch that dollar and see those correlations so that you can tell when that's what's moving it versus something else. Right? These things can give you clues as to what the catalyst for that particular move might actually be. Kevin says he had the best trading month of his career. Did Friday go well for you then? Oh yeah, okay. So I was like, I would think that there was something I wanted to shift over to, and I didn't know what it was. And it was Lucas asking me if I'll take the Series 57. So the Series 57 is like the prop trading one, right? The SI, you have to take the SIE first. Securities trader. I mean, probably not. I don't think that. So the ones that I took are ones that, like, I can start my own business with. I think you only take the Series 57 if you're going to be an equities trader for somebody else. Okay. Oh. Oh. You're Kevin B or in that screenshot, yeah? Wait, should I show them? Yeah. Oh, that's not bad at all. That's actually too much. Oh, okay, yeah. Like when I say that's maybe too much. That's the sort of thing where it's like, okay, cool. So you were on, and hopefully you realized that you were on at the time, and so you were sizing up and you were taking advantage of it, right? That can go to your head, right? That can make you, size up and then lose it all when the market goes into a mode that's not favorable to you, right? So you got to be careful with it. But 10K is a lot. Like 10K is it's interesting. They have, well, let's see here, six guys that got over 10K, because like, why trade the prop firm anymore if you can make 10K? That's from there. You just go and get your own account. But oh, in Germany, there's tax reasons. Okay, you can say so. Anyways, yeah, I don't think I'd take the Series 57. I might take the Series 31, which allows you to do managed futures, but I'm not entirely sure what I need to do. Or so the thing is that our plans are kind of a little bit in regulatory limbo to some extent, right? We know that they're working on a test that you can take to become an accredited investor. Will you actually be able to, like, so my idea is you become an accredited investor and then you invest in our hedge fund or our managed futures fund, right? No, I think that the Series 57 is one that you take when you're not going to go all the way for the Series 7. So like, I think that if you were to go and work for who's that one prop shop, like real prop shop that's left? I can't remember, but if you were like in a real prop shop, I think the 57 is the one that they make you take. Yeah, SMB. Isn't the Series 57 something that you might have to take if you work at SMB? That was my recollection. Because if you're going to go and work for like Goldman and trading for Goldman, then you need a Series 7. I guess kind of the schema that they have set up with these tests is that if it's two numbers, it's kind of like an add-on, or it's either an add-on or a lesser version of something else. I had the 55 and it allowed me to make a market for the firm in the NASDAQ. Yeah, it's not only for prop shops, but I'm just saying, like, the the kind of job that I would be able to leave my current job for and go do, I think would require a Series 7. The 57, the interesting thing about the 57 is that they require you to take the SIE first. Although I think there may be a rule that allows me to get around that because I have the Series 65. Greg says that the 7 is easy to pass. I wouldn't put it that way to them. Right? The thing with the Series 7 is there is a lot. Okay, so like the Series 65, so like okay, so here is the book that I used to study for the Series 3. I think that everybody that's watching this stream, you're trading futures, that you could benefit from taking the Series 3. I don't exactly know how you use it, but it seems to me that you guys all have some skills and understanding of a market, and that, you know, is valuable to companies and isn't being fully utilized, and you would need a Series 3 to be able to do that. So I think that there's going to be a benefit from getting the Series 3. Okay, look at how thick that book is, okay? It's not that big, actually. You can read this in an afternoon, depending on how deeply you read it, okay? And then after you read the book, you're going to go and do note cards to memorize a bunch of things and take practice tests. And this is like mostly practice tests, right? Mostly practice tests. Okay, the Series 7, hold on. Okay, this, I got this when I worked for Goldman. There was somebody that wanted to do this Series 7, and eventually they gave up on it and left the firm, I think, and they left this book behind, and that's how I got it. So I never took the test. I think that at the time I thought, oh, well, I can just start reading this and then maybe I'll do it, because that's a big honk. Look at the freaking size of that thing. That's a honking thing, right? Compared to the Series 3, right? See the size difference there, man? Holy crap. And I didn't realize that, like, it would have been useless to me, really, because most of the preparation comes from taking the practice tests. Okay. But so the Series 7 is considerably more information. Considerably more information, and a lot of it is very nitty-gritty details that you have to memorize too. Like all of these little rules and stuff like that. Okay, is a CFA useful for getting a training job? My understanding is yes and no. Like, when you go and you look at fund managers, for instance, a lot of those guys have a CFA. And there's a couple of different designations that are not, so those are not government, you know. The ones that we're talking about, this Series 7, that's like something that the government requires you to do before taking something. Whereas the CFA is more like an industry accreditation sort of a thing, okay? But so a lot of the money managers and stuff, they do have those things. But I am also seeing in the industry, when I see people talk about this online and stuff, a lot of people don't put stock into the CFA. I think that the CFA requires you to learn a lot of things that are false, quite frankly. So that it's kind of iffy, but it sounds like that there are still some benefits if you take it. But like my approach is kind of like, I don't know if you actually become a better trader from it. You know what I mean? Because they were starting to do all these studies about, does having a CFA make you a better money manager? It turns out that it doesn't help. Yeah, well, that's because all of the things that they're teaching you aren't actually real. Not sure how a Series 3 is useful for us non-Americans? Well, because do you trade on the CME? Then it could be useful. I don't know what if they have similar tests in the EU or what the deal is. I find it really weird that I don't run into a whole lot of information about how those things go in Europe, but I guess that's because the United States are still like the most active in primary markets and stuff. But anyways, so Greg was saying the 7 is very easy to pass. It wouldn't surprise me to see that the questions on the 7 be easier and so forth, but it would be a lot of time. Like, I think that if I was studying full-time, it would be like 3 months. Whereas these other ones are like 4 to 6 weeks. So... And then the other thing is to take the Series 7, you have to be sponsored. An existing broker-dealer has to sponsor you to take the Series 7. Oh, I took it, Greg. I passed it. I took the Series 3 and passed it. Wait, they told you how many? Because when I've taken the tests, they don't tell you how many you get right. They just tell you whether you pass or fail. They only tell you how many you get wrong if you fail. You got a letter from... Oh, that's weird. Oh, maybe I think I remember somebody saying that, like, they only tell you if you did really good or really bad. So maybe because you only missed 2, you got a letter from them? There's a story about a firm who presented people to take the exams and failed, so they would bring as much material as possible for real candidates and got busted. Really? Greg says he was doing a long time ago. Yeah, I don't know. But it was still to the point of, okay, so we got this Series 3, now what do I do with it? Right? So one is I can start a commodities trading pool, or I can start a commodities trading advisor business. The rules about who can actually invest in your commodities trading pool seems extremely vague and unclear to me. I read some things that make me think that you would have to be an accredited investor to sign up for these pools, but it also kind of sounds to me like it's in a legal gray zone where they didn't really specify very well what the qualifications are. There are many of these instances where if you wanted to offer them to the public, it basically becomes a public offering, and then you have to go through the SEC. So I may have to go the managed futures route, which would mean that I would need a Series 31. So I take the Series 31. But basically, the idea is we create a simple hedge fund strategy, like probably a momentum strategy, and then we cater that strategy, or we cater ourselves, our business, towards servicing people that receive the accredited investor designation by taking a test. Because there's going to be a test. It's also, when the test comes out, I'm going to be one of the first people to pass it. It's my plan. Which I wonder how that's going to work out. Like, are they going to announce it and they're going to be like, you can take the test next week, and then I should sign up to do it? So if I've taken the Series 65, and I'm guessing that's going to be pretty similar, right? Or will the guys like Securities Trading Corp have material, like programs already ready for it? Beware of an old man in a profession where men die young. With the 55, 57, almost everything I studied was not on the test. I can no longer make reasonable. It's been a total failure. I mean, this comes back to this larger thing, which is that our side of the industry, you got to understand, our side of the industry has been gutted, guys. The robots came in and freaking took over. If anybody in the modern world has the case to be made that they took our jobs, it's us. The market, the liquidity providers, the floor traders, the locals have been decimated by the robots. It is extremely difficult for us to make money anymore. I 100% blame the robots. And I don't say that to complain about it, because I have another job and I make a lot of money from doing that, right? But that has to be pointed out to any of these kids that think that they're going to come in and become millionaires from day trading. It's not the same thing anymore. And one of the things that we kind of like, how do you cope with that? One of the ways is you move higher time frame. And now you're doing swing strategies instead of day trading. Right. Yeah. 100%. Algo stuff in 1999 to 2005 was still human versus human to some degree and significantly easier. Yeah. It wasn't until around 2008 that the industry shifted. Right? That's why, for me, I did not realize this until it was already too late and I was obsessed, right? I don't know any better. But that's the thing, is that there are other parts of the industry that you can expand into, I think that. And that's kind of what I'm trying to learn. Is like, okay, but if you get a Series 3 and you start a commodities trading advisor business, what can you do with that? How far can you take that? Is it actually like feasible to just advise farmers on their hedging and get enough business from that to make a living? Because, I mean, if you're a farmer and you want to hedge that, like, probably you do talk to somebody. And that's what that guy in Trading Places was supposedly doing, right? Oh, I see. He's saying who else he follows. Simple Tom. I've heard of his name before, but I'm not too familiar. I can't blame the robots that never had an edge. That's fine. I think the part of the other thing is that futures has always been a tough game. Trades 4x with a grid system? Well. That's not a terrible way of going about it, at least. Right? I'm not like endorsing the grid, but you know, it's not one of those methods that I'm like, oh, that's, you know, objectively bad way of doing it, and you're stupid if you believe any of that stuff, and yada yada yada. You know, like price action. When people tell me that they're price action traders, I'm like, oh, okay, so you're not going to be around in 5 years. Yeah, now all of that just brings me back to, so if I decide to register with the CFTC as a commodities trading advisor, what should I call my commodities trading advisor business? Because I don't think I want to call it Speculator Seth Commodities Trading Advising. Man, Treasuries have definitely been constrained today. I would say that like overall level 2 activity has been maybe okay for a Monday, but it's just been so tight. But yeah, I think I'm not gonna like go ahead and do this series 31 yet. Like I'm gonna wait to see like actual real confirmation that like that's the thing that I need, because my understanding is that this series 31 is even smaller, so it shouldn't be too hard for me to study for that one. And if we can actually get a hedge fund off the ground that like encourages all of these people to go and become accredited investors and invest in the hedge fund, that could be game changer, right? That's what I'm looking for is I'm like, okay, where's a change in the industry where there's some opportunity and I can really make some money from trading, right? Because that's where the money is made. That's where these people become famous is, you know, they're right there on the cutting edge, and they're the ones that made that thing a thing. Some sort of paradigm shift in the industry. I don't think I've ever heard of some trader that, like, they're using a method that's 100 years old and they became a millionaire and famous from it or something. That just doesn't happen. Every wealthy person I've met from trading, guys with private jets, etc., all make their money from fees. Yeah. Well, but that's where I'm like, okay, so if I'm going to do commodities trading advising, it would be making money from the fee, but like, what am I having to charge that you would actually make money from it, right? Because if I say if you know, there's a farmer and he hedges this $100,000 crop or something, and then I charge him a fee, is I make like $1,000, or actually maybe it's not insignificant. I don't know. I guess I just kind of have to keep walking and see where it goes. maybe if you know somebody that is a CTA, send them my way. Talk to them. I kind of sent out a couple of feelers, but I didn't really get anything back. Not yet, at least. $1.5, 2% fee per year for managing results do not matter. But that would be, okay, that would be like if I'm managing a fund, right? So if I'm managing a fund and I do like 2% plus a performance fee, then if I got up to like 15, $20 million of assets under management, I could switch to doing just that. And I think I could bootstrap it. I don't think that at the beginning that I would have to quit my day job. I don't think that it would be that much of my time. But for doing commodities trading advising, isn't it just like wouldn't you just charge a commission on a per contract basis? Like equal to the commission that your broker does? And if that was the case, then you would have to have a lot of clients to really make any kind of reasonable amount of money. DES is puking. Looks like it's just kind of churning there for now. It's pretty constrained so far. ZN, I would also say, I mean, the larger trend in ZN is definitely down, but for now, they're just churning sideways, probably waiting for the news at the top of the hour. Sales, all these are great guys are great salespeople, yeah. I don't know if I'm a great salesperson either. I have like the best NinjaTrader 8 indicator package out there, and I don't sell it nearly enough. It does okay. It's kind of funny. It's like, it just kind of markets itself, and I'm like, oh, wow. But what if somebody that was actually good at the marketing was actually marketing it? I was looking into actually making an affiliate program sort of a thing so that, like, we could make the price $125 and then you'd get $25 for every referral or something like that. But there's a lot of infrastructure in place that you have to set up to do that. So basically, like, PayPal doesn't just have a pre-canned thing that does that for you. You have to create an affiliate management program, and that comes with a monthly fee and all that sort of stuff. It's not a game of charts. It moves on emotions. Well, it moves on a lot of different things. Not just emotions. Find a place where there's money park. Yeah. But I'm trying to like branch out sort of stuff, right? Like, I think one of the advantages that I have in starting a hedge fund is that I can do all of the tech back end stuff myself. I know how to set all of that up and manage it and keep it running. And so I'm kind of working. I didn't get as far this weekend as I wanted to. I was working on setting up my Kubernetes cluster, and I got the cluster up and working, and then as soon as I tried running something on it, it crashed the cluster. So I don't know what to do. And I still run into this bizarre issue too, where after the machine has been on for like 2 weeks or something like that, it like the network card stops working. And I don't understand the errors that I get in var log at all. So I'm kind of half wondering if it's just Debian. Like, do I need to switch to a different distribution and see if that works better? Because I did kind of was messing around on Windows subsystem for Linux. I was messing around with Arch Linux. And when I'm just using the command line, Arch seems perfectly capable. Better than because Debian is like so... Debian is like so particular with what packages that they include that like half of the commands that you need to even like run the operating system don't exist, and you have to install them, which is so effing annoying. Right? Look at Wood, she is horrid and very wealthy. So the thing that I think is really bizarre about Kathy Wood, okay, is that she seems to be like blissfully unaware of how her entire fund and strategy actually works. And I'm not sure if that's like she really is that clueless, or if she pretends to be clueless on that because if she was, how do I put this? If I was running that fund, nobody would want to invest in it because I would make it very clear to everybody what the risks are involved with it. And they'd be like, oh, well, maybe I don't want to take that kind of risk, right? So Kathy Woods instead plays stupid so that people don't realize all of the really, really negative aspects of a fund like that. You know, you're in emerging technologies. A lot of those companies go kaput. They're high risk reward. When you do make money, it's often you're just kind of lucky. You're at huge exposure to interest rates. And then she's like, oh yeah, no, but interest rates will go back down soon. Yeah. And everybody's just looking at her like, are you effing crazy? Like, you're seeing this inflation and everything, right? Like, it's not probably never going to go back to what it was. Not for decades. Is she really that clueless, or is she just not telling you because she does, you know, she wants some money to keep coming in, you know? No, the only PMI that I know of that is early release, and it's not is the Chicago PMI. That's run by a different company, and they release it to subscribers earlier. That's the only one. I should note that this is ISM. ISM is an important one because it's more recent. Like the S&P does one, but it's kind of like older information. But yeah, we got about 15 minutes? Yeah, 15 minutes. This one doesn't seem... I think that it will still be pretty significant. So they're looking for ISM services PMI to be 52. So higher than that would probably be pretty bad. But considering that things are already pretty bad on that front, maybe the downside is limited. If that one was below 50... I think you might see a relatively aggressive rally in the Treasuries. No, okay. Sorry, you're right. I think I have these mixed up. Oh, no. Yeah, it's a PMI. So you got to realize, okay, PMI stands for Purchasing Manager index. So basically, it is a survey that they send to purchasing managers at companies, right? Okay. There are multiple companies doing these kinds of surveys. I don't know why that's the case, but there's multiple companies that do this, right? The S&P 500 does one. The people that do the Chicago PMI is a different group of people. And then there's ISM. ISM is watched primarily because it's the most leading of them, right? Like when you get the ISM services PMI, you're really getting like the most forward-looking data you can, right? So ISM is the company. ISM PMI tends to be a pretty important news event, and as of late it has been in particular. But it tends to be important because it's one of the most leading indicators that we get. Like, what are leading indicators? Money supply, new orders. I guess consumer sentiment is kind of considered leading too, but that one's a little more complicated. Oh, here's an interesting new article from Fed Guy, although I'm sure that you need to be a subscriber to read it. Yep. Hedge funds are the marginal buyer of treasuries via the cash futures trade, but the ultimate risk is held by real money investors. This post looks at new research on what drives their position in futures and speculates on what could lead to reversals. Well, I really want to read that article, but I'm not going to pay $100 a month for it. Sorry, Joe. I kind of want to do one of these things where, like, I could make a Substack primarily so that I could buy these things and then digest them down for you, and basically use it as a way for us to pool our resources to get access to some of these reports. Like if I could make one that would be a Substack big enough that we could pay for a Bloomberg subscription or something like that. Oh, right. You were talking about the ISM one. Or you were talking about the S&P PMI. I see now. Usually that one doesn't matter as much. That's weird. Could you guys hear the news squawk coming through my headphones or something? It's funny. Looks like they did rise a little bit off of that. Yeah, this one is the one that I never made sense to me, why the S&P PMI gets released 15 minutes before the services PMI. Because it's like the S&P, it's like older data, and it's about to get superseded anyways. But whatever. Doesn't matter. How do bonds and ES have such a large divergence? Are they really? Do you really feel like they're diverging that much today? I don't know. I think that most of the time the flows are unique to each of them, right? Like here in the Treasuries, you only really get a really good correlation trade with ES when ES is going risk off. Oh, you know what's going on here is, there we go. Well, okay, yeah. Hold on a second. So when the S&P 500 goes risk off, that can create a really good buy in treasuries. And often what you will see happen is the treasuries will like trend up really strong, and then they'll sell the equities. So they'll hedge themselves over here. They'll do the trade over here first, and then they'll sell the equities, right? But then the other situation where you're going to see correlations between them is on matters regarding interest rates, right? Lower interest rates, which means that the treasury is going down. Sorry, lower interest rates, meaning the treasury is going up, tends to be good for the S&P 500. And so you'll see the S&P 500 go up and you'll see the treasuries go up. But on Friday, what did we see? We saw the treasuries go down. And initially the S&P 500 went down, but then eventually the S&P 500 bought it back up. So what's with that? Well, so higher interest rates is bad for the S&P 500, but why are we getting higher interest rates? Because the economy remains strong. And so it seems that the equity traders decided ultimately that the strength in the economy is good for their stocks and that the higher interest rates isn't necessarily a big deal yet. So they still think even if interest rates are going up that we're soft landing. In fact, I would say that with interest rates a little bit higher, the soft landing is more likely to happen. Because I think the thing that will destroy this soft landing narrative is if growth gets too high and inflation comes back again, right? So that's why, but it's interesting that, you know, the treasuries went down. The equities didn't buy back up until like the close of the session. So it's that buying up was basically had nothing to do with the treasuries or the interest rates, right? And that's something worth keeping an eye on because some of those late day moves can be a little bit sketchy, right? What did Lucas send me here? Oh, right. Oh, I don't know what this little matrix that you have up there is, because I see inflationary, deflationary, but what's the difference between the two inflationaries? Is this like, if it's inflationary and the dollar is up, then you see commodities down, bonds up, and equities up? And since we saw bonds and equities up, that must mean that this is inflationary? I don't know about that one. I knew you would shit on it. Well, that might be true from a longer term perspective. I don't know. In my mind, how can you say something is that we're in an inflationary environment if commodities are declining? So if commodities are inclining, then what's inflating? Bonds and equities are inflating, I guess. But is that what's actually happening right now? It doesn't seem like it. But the thing is that what this says is not what happened, right? Because what we had was inflation was up, the US dollar was up, commodities were up, and bonds and equities were down. Right? We had I'd have to open this up in a different window. Right. we had in 2022 we had up, down, down. And that's not on that chart. So Greg bought Jigsaw when that was right about when I bought it. Actually, no, about a year before I bought it. You know, it's funny, when I bought Jigsaw, like, I felt like I thought about it and looked at it for a really long time. But now looking back in retrospect, that's not true. I just, it had only been like 3 months. It seems like such a small amount of time where I was not trading with Jigsaw. Ugh. So I was seeing this one. It was a post from the Everything Bubble. And it was on Jerome Powell saying the U.S. is on an unsustainable fiscal policy. The debt is growing faster than the economy, right? And then the first comment is, well, maybe stop giving money to Israel and stop going into countless wars and focus on your own country. And it's like, well, okay. The amount of money that's going to Israel is trivial. Trivial compared to the debt. The wars doesn't help. But that's not in the budget. It's the entitlements that are killing us right now. They need to reform the entitlements, and the sooner they do it, the better. And no, of course, no politician wants to do that. They were kind of designed to make it difficult for you to ever make a change to it, right? If you're in a fake prop firm, you can game the UB for 1 to 2 lot wins. Han's like, oh yeah, totally you can. You totally can. If it's a fake sim, yeah, because it will give you fills that like you would never get in real life. Does that a lot, actually. There was some setups. I remember this one time when we were kind of tracking some of these things, there was some setups that I thought, oh, if I only did that, I bet you could pass a combine only doing that. And it's actually not a real trade. Yeah, if you put in a real 35 lot, that would change everything. I guess with a prop firm, you'd only be doing 1 or 2 contracts, though. What's going on out there? I'm hearing a vacuum. But you guys don't hear the vacuum, do you? So it's okay. It's a good microphone. It's got good noise rejection. Okay, here we go. They are doing the full pull. And they sell 53.4, higher than expected. So let's see how correct I end up being here, because I said, well, If it's a little bit higher than expected, I think that you could see some selling, but the selling might be somewhat limited since we're already kind of down. And if we were below 50, then that could be really positive. Well, we were higher than expected. Services PMI for 53.4. We do have Fed Goolsby speaking now. Oh, okay, yeah, that's bad. Spices paid 64. So I think that sell had probably more to do with the prices paid. In fact, how do I want to handle this? Should I add another contract on in through here somewhere? I suppose if it retraces, maybe I will. Because they've kind of been playing that game lately. Why did nobody give a crap about debt when Dementia Donnie was raising deficits? The response, many people are saying they were big, beautiful deficits, the biggest anyone has ever seen. Huge. Yeah. That was funny right there. Yeah, it really bothers me that Trump seemed so cavalier about the deficit, but I think that it was because he thought that he would be president another term and then he would be able to clamp back down or something. You know, he didn't care as long as he was reelected, just like any other politician, I guess. But this swing trade that I have in ZM, that is a sim trade. So the swing trades are still an experimental thing, let's say. I've done pretty okay with them though. Like, I've had some where I lost big on them and I didn't like it, but when they run, I make so much more. You know, it's like I'll lose $1,000 max. And when I win, I'm making like 3 to 5. So like, I was in a drawdown, and I don't think that during that drawdown that all of those trades were particularly consistent, you know what I mean? Because sometimes I'm just doing what I feel like that one day, and it's not part of a larger strategy. Okay, so some of those losers were maybe not necessary, but oh geez, look at that. This is like 5,000 contracts just sold there down and pushed it back to the bottom. I don't know if they're going to really give me a chance to get a second contract here, guys. That was some aggressive flows right there. I'm a little bit scared of putting a live one on here, but because they probably are close to the extent of their influence, but that sort of play does make me want to sell it. That's kind of, although lately that's been like they sell for another little clip and then that's usually the end of it. But these are coming into new lows still. That's a new low. Oh, you know what I need to do is I need to double check here on the daily chart. Aha. In fact, it is. It is. We can just straight up take this. I can just straight up take this. That is a breach. So I suppose that we're still in a spot where you might see some mean reversion, but those orders, I think, were probably momentum guys stopping in. Well, let's watch the flow in this area a little bit because it's like right on the line. Okay, this 26 is like where the line was before, and plus we've got Cool Speed still spot talking, so Sam Altman says ChatGPT should be much less lazy now. Okay. I remember it used to have no more than 50 resting orders as an average on UB. Yeah. I'm kind of trying to stay focused here, so I'm not going to pull it up, but it's probably like less than 100. It's probably still around 100, right? Ooh, apparently garlic coin has been on the downturn this past day. I have to remember how to even look at it. Won't speculate on the potential for a 50 basis points cut. So they're doing a Q&A and they're asking him that. Like, come on, there's no way that they would do a 50 basis point. Yeah, you can see it. That's a decent sell there. Huh. That brings them just barely below 1 cent. Somebody probably got impatient. Tired of waiting on it going. Wanted to pull their money out and put it into something else. Catching a 3-point move would be, well, they sure, I mean, they got hammered 10 points off of that news. Is that not enough for you? Treasuries are kind of coming back to the scene of the crime where that just completely slipped through. And it is coming back down into this 26 area, so there's still some pressure on them. They seem to be handling it okay. The whole point for me in ES, wait, I don't understand. The whole point was for me to make 1 to 3 ticks without losing a true fallacy. Well, there was a time when you could just go for a tick in ES. That's for sure. Definitely changed. I'm surprised that the exchange didn't change the size as the index went up. But I think that's because they find that the more volatile the instrument is, the more retail traders want to trade it. So and now it is like 10 points is a good move, whereas before 4 points was a good move. Okay, still bouncing around in this area, so Billsby still speaking. Huge buy vol. If only TA traders knew what we knew. Well, I think the biggest idea that's been dominating my thoughts for the last, let's say, month or so has been this idea that almost everything that technical analysis traders know, almost everything that they've read and have trusted, was based on momentum strategies where you were trading a wide universe of futures on swing trades. And I think that most of what these, because when you think about it, like, this is a portfolio strategy, you're going to hold it for several months and all that sort of stuff. Then all of a sudden, these things that retail traders, technical analysis traders are saying kind of make sense, right? Like ignore the news. Yeah, if you're holding it for like 9 months, what happened today, for instance, on this particular piece of news doesn't matter, right? If we are swinging short, that's great. But we'll probably see like many more news events that are bad for the treasuries before you'd take the trade off, you know? So on that perspective, like, you pay attention to the news and everything, like, you do the analysis and you understand what your risks are to your positions, but you kind of ignore it because ultimately it's a teeny tiny little thing compared to like the edge that you're trying to catch, right? That only makes sense if you're holding it for like a year, a couple of months to a year, and you're trading a bunch of different instruments and all of this sort of stuff, right? So I really think that most of the stuff that technical analysis traders think they know was all based on swing trading momentum strategies and not day trading. I think once you come into the day trading time frame, it's a different game. And when you are day trading on the intraday time frame, The biggest advantage that you can have is being informed, knowing what's going on, having the news before other people, being able to interpret or see the nuance in that news before other people, understanding the strategies that these larger funds are using and being able to tell when they're going to be coming into the market or not. This is an area where I would expect to start seeing some activity there, but it's not, I'm not completely seeing it. There still appears to be some support here. They might break it though. If they break it, then this thing could have some legs. Was that a new low? No, it was equal. Okay. It was an iceberg on the offer, but they cleared it. Iceberg on the bid now. Oof. I don't know about that one. That's a little scary to me. I could kind of see it going either way. Like, there's some activity there that makes me excited for a new low, but there's some activity that makes me think that they're still going to kind of middle around here, and so it might go either way, and it could be big either way. I think I would prefer to see it go down though. So, something I'm noticing, or just realizing now, is that we did see substantial flattening on some parts of the curve when that happened. But I'm not seeing it on my 2 and 10 year. In fact, on my 2 and 10 year, I'd actually say that we're a little bit steeper here. So I don't have the 2 year up. Maybe I should. There might be something going a little odd in the 2 year. And that makes me a little bit more cautious about how I'm reading this order flow. Because if the 2 year is kind of pushing up, that might hold things back a little bit. So I do think the play here is probably to go short the long end, right? But this is just why when I see like this the 5 year pulled back considerably more. They're not completely lined up, so. Oh, that's interesting. So on the side here on LinkedIn, I've been trying to find more connections or groups related to commodities trading advisors. And so I found this one called Commodity Trading Advisors and Pools. And the admin of the group is Jeff Gilfillian. Vice President Business Development at Phillip Capital. Hey, we know who they are. I'll join that group. Oh, and that's interesting. He has a, I didn't tell you guys about this, but if you want to move to New York, CFM, Capital Fund Management, is hiring researchers in New York. So, like, they're looking for short, mid, and long-term researchers. Experience in building signals leveraging level 3 tick data. That's interesting. My recollection is that level 3 is like taking tick data that's aggregated from multiple exchanges. You know what? I don't want to move to New York, but maybe I should apply for that. Maybe I should apply for that. I don't want to move to New York and I don't want to leave my current job, but maybe I should apply for that. Okay, but this group, they had this little URL powered by crypto signal, Bitcoin advisors. Ugh. The East Coast sucks. Yeah. Well, let's see here. They are asking, or they want 200? Yeah. Okay, well, I think that my instincts on that kind of area, I think, proved to be useful. I'm not going to say that I predicted that it was going to pull back, but I did have the account armed and was seriously thinking about taking it. But once I kind of realized what the spreads were doing and everything, I kind of thought twice about that. So they may, as of yet, I mean, look at that. The two ticks down, just boom, boom, 2,000 to take. Are you supposed to put your photo on your I'm told no. Sorry, bro, Seth, you need to read this. Wait, you're posting a link because I can't see your links. Here, actually, I think I can. Will it let me do that? I don't think it'll let me do that. See if I'll make you a standard moderator. See if you can post the link now. Oh. See comment from Amor Fatih. I tried testing DOM trading for 2 days and I was able to get in and out 70% of the time within 3 seconds. Is this something by default with the DOM? So depends on your instrument, I guess. Right? So if you're trading the S&P 500, then maybe. You're trading the ZN, maybe not. You know, remember there was that trade like 2 weeks ago? You probably weren't here for that one more, but I had a trade like 2 weeks ago where we're like, oh, this looks like a tight market, so let's try a mean reversion trade. And I was in it waiting for a fill at one tick for like 2 hours just to make one tick. Crazy, right? So my understanding is if you are going to like do like a high frequency trading scalp sort of a system, then what you want to do is have equal risk reward and like a 60-70% win rate, which is high, right? Like you really have to have a really solid edge to do that. And I think the problem is that to get that kind of an edge, you probably have to be trading a correlation. Like you're doing basically statistical arbitrage kind of stuff. And the ES is too fast and too efficient for that to pull that one off. So it's very hard to do. I guess I'll try this one too. It was live. Tried when there's low volatility, was slow and way easier to win every other minute. Well, okay, but so one of the things is, are you like doing something like this where like, you know, I go short here because the trend is down, right? So I take a short at 28.5. I'm trying to take one tick, but then I don't even have a stop, or like my stop is like 4 ticks away. Because when you do that, then yeah, you're going to win like almost every time. It's something that we see very, very commonly is retail traders will take on a lot of risk and not realize that the results that they're getting are primarily due to the risk that they're taking and not to any kind of edge. Tick drills in the ES sim only goal practice entry and exits. P&L should be negative. I don't know. When I do like catching the edge, I usually make a little bit. Great. See, I still don't understand. I have nothing against the guy. It's just whenever I go to Fat Cat's channel and I start watching a video, I like immediately turn off. It's just like, you're gonna talk for 2 hours about freaking what? And then I start watching it, listening to it, and I always listen to things at double speed, you know? And I'm just like, what is? I just don't. I don't get the appeal. I just don't get it. I don't get anything from it when I listen to it. No, Seth, I was like too less aggressor and they can't sweep through bits or offers. That's it. Okay, so like you're saying you tried to catch the edge and then make one tick further from that, and if you start to see backflow at all, you get out? Because that would be, I think, really hard to get a solid win rate with doing that. You're getting a solid win rate. Well, I mean, a one-time thing then, yeah, but if you're able to do that for like a month, your average loser is the same as your average winner, then I think you got something going. I just like how he trades. Okay. More popular than me now, isn't he? I think so. Just like 3 or 4 ticks I was doing simple plus minus in my minus, and this was happening for 3 to 5 seconds. Well, to make 3 to 4 ticks in ES, sure. So in ZN, what I've done for most of my career is tried to make 4 or more ticks. You need an actual move to make 4 ticks. Like, 4 ticks can take 30 minutes to 2 hours sometimes. So I think that a lot of it is you trading the E-minis, right? And from that, you have to realize that just like a lot of what's going on is really actually just truly random. So... What time is that? Oh, 8:34. Get out fast on things that are not working. Yeah, I agree with you. I maybe have been, during my drawdown period that we've had here lately, I think that there was a lot of me just staying around in things for too long. Because when I'm doing well, it's like it never goes against me and it just keeps going and going and going, right? So with the kind of edges that I want to take advantage of in day trading, I shouldn't have to take a whole lot of unfavorable excursion rather. But, you know, it was kind of getting iffy. You know, I was giving it more room because there was a lot of two-way action and stuff. But maybe I should have just, you know, been more hands-off during that time. These days, if you take more than 2 ticks, I don't know about that on ZB. You know, like, so let's see if we can find some examples. You know, so like, let's just say that you decided to get in on this downtrend here, right? There was like what, 4 ticks against you right there, 5 ticks against you right there. 5 tick pullback on that one. Like it's not uncommon to see 4 to 8 ticks. Mean reversion, the trend still be down. Looks like this morning though, you probably could have gotten away with 1 to 2 before that. Well, here, if you had taken that 1, 2, 3, 4, 5. But maybe it's just say that's a bad entry and you should have waited, but. You can see here on the Treasury, the 10-year liquidity hole pretty clearly forming there now. So we're well past the point, I think. Well, actually, take that back. You could. It's only 8:38. We would maybe be seeing like a second leg if a second leg was coming. The way that it's acting makes me think that the second leg is not coming, but I think I'm probably calling that too early. So let's see. I don't really like 4.15 is basically like the price has been like this whole time. So I'm kind of like, I don't know if you're getting actually a very good price to try and scalp it. But MA and MFE is basically once you get in a position, how many ticks does it go in your favor and how many ticks does it go against you? Right. So it's a measure of how favorable or adverse the conditions were while you were in the trade, regardless of what your final profit was, right? And this is actually a very, very useful statistic that is neglected in, testing and backfitting and all that sort of stuff. Is like, if you're winning every time, but like your MAE is like crazy high, then it's not really a very good strategy. It just means that you're holding trends that go really far against you and, just hanging on for dear life. Wow. Did you see that? Okay, maybe second leg is on, man. I don't like trying to follow an order like that. I've been a little overly cautious with my live account because, you know, it's drawn down pretty far. Probably want to put more money in it, but I don't know if I can follow. The other issue I have is that we've got like 20 minutes left, right? But the way that they just got slammed down to the lows really perked my interest. I think we'll break down below 49.42. Okay. Well, I don't think that the S&P 500 would be getting into prices that would like concern people too much until they get below 49.25. So I think that reaching 42 right there seems appropriate. It's a recenter. This song is nasty. Okay, well, it did break it. It broke it by a point, right? I don't know if like it being it's calling it that it will break 49.42 is too big of a prediction though, right? Didn't tell me how far it's going to go before it stops. That would be more useful. Well, Xian is still kind of net selling. I definitely saw selling in the 5 and the 30 there on that last little move, but I'm seeing a little bit of backwash already. Already seeing a little bit of backwash. How long do you hold? So I think my average holding period is about 30 minutes. This one, I'm holding this for days, right? I'm basically the idea on this one. The idea on this one is that we should see a breach of these levels right here and eventually come back to this moving average in the like 109 area. I don't know if I take it off there at that point or what. I just kind of play it by ear from there, but that's what I'm looking for. So that's a swing trade, but it's a sim trade because like the larger thing is I'm kind of trying to move to more of like a managing a fund instead of day trading. I was seeing backwash, but they got slammed back down to new lows very quickly. So I think that we get a new meta order coming in. Well, the Norton method is a completely different thing, right? Because basically what he's doing is he's looking at correlations and making decisions based on those. Right? That's trying to be a market maker. I'm just saying, like, trying to do the Norton method on ZN, I don't know if you can get that to work. You know, I've always kind of dabbled around in that sort of stuff. I've never made it like my thing, but I've always dabbled around in it, and I'm not sure that you can really pull it off in ZN because of the size. You need to be at the front of the queue to do it. For the Norton method to work, you need to have a niche instrument, you know, that people aren't providing liquidity in, and you can provide it. So like I could probably provide liquidity in the 10-year if I had a better correlated instrument to trade it with, because the difference between these treasuries and these treasuries, like the basis difference is a basis point, which is 10 ticks. So I can't bring the spread in because of that, right? Okay, another big iceberg there, 24. I'm still a little... I think I should have, you know, I could have tried maybe 15, maybe it would have gotten 14 and a half. You know, but maybe there would have been a $10 winner in there for me. Those moves down sure did make me feel FOMO, but they weren't too crazy yet. And I'm still kind of seeing some sketch stuff in the flows here. Hmm. Okay. Yeah, it is kind of coming back up there. I don't know if they're going to get back to 27 though, where I think the most volume was trading. Mm, 49. Well, that's like way up there, man, dude. Well, the point of control is 49.68. That doesn't count the pre-market stuff. I don't know, man. Well, I mean, it did break 42, but it's been pretty slow. Remains to be seen whether we'll breach Friday's lows or not. I think that's kind of the key point. Like, that's the point that if they breach Friday's lows, then the market will really take note of that. And here in the Treasuries, it's kind of like, well, so like, they kind of have to, well, hold on. Duplicate new tab. Duplicate new tab. Give it a second here. Look at it, because it was a breach on the 10-year, but I don't know about the other ones, so. Well, I'm still seeing some selling flow, but they're just kind of look stuck to me. You know what? This is like the largest 2-day decline on my chart, I think. Wait, so... Oh yeah, I'm on ZF. Let me come back to ZN here for a second. Drawing tools ruler. We'll go from the open to the close here. 2005. So 65 ticks. Okay, what else is a pretty big 2-day decline? How about this one? No. No. Maybe this may, I mean, that one's not a 2-day decline, but maybe this doozy that kind of started it all. Jeez. That really is a big move. I think I'd have to do it programmatically, but this is like one of the largest 2 days declines we've ever had. That short was hard to catch, says Octavius. What, just the overall short, or? I mean, on this one, if you had taken a short shortly after the news, I think you could maybe be up 10 or 20 bucks. So I'm not going to say it was hard to catch, but it is. I think it's kind of been tricky for other reasons, right? It's just like finding a good spot has been kind of iffy. The risk reward just doesn't seem to be there, you know? I'm maybe being too picky, but hey, that's me, right? The purple and brown one, what are you talking about? You mean coming back to this thing? No, what's purple and brown? I don't have anything brown on my charts. How dare you insinuate that I have brown on my charts? No, so there's a lot of stuff on here that doesn't matter, okay? So like I keep track of the moving averages just to get an idea of, you know, there are a lot of strategies that base things on a moving average cross. Maybe I might use that as a filter, but you know, I'm still doing research on that. I ignore it for the most part. The thing that I care about the most here, like the way that I think of it is, if you have a breakout, so you have a new like 30, 60 day low, right? This is the newest low for 2 months, essentially, right? Going back to here, essentially. So when I see a breach like that, that's what makes me pay attention. That's what, right? It's the new high, new low, new 50-day high, new 50-day low, or whatever it is that kind of like triggers everybody, right? So that's the main thing that I'm looking at. But what I'm kind of doing is I'm come up here looking at this and I'm saying, okay, well, we had a non-farms right here. That is something that I think could push us down to that spot. And so I'm taking the trade on the expectation that it's going to get there. And if I had kept more contracts on, I didn't want to keep too many contracts on over the weekend, you know? But if I was doing it during the week and I had left 2 on, then I can take one off right here. And that way I don't have to worry about if it actually continues or not, right? That's this gold color right here. Yeah, that's average true range. Well, so each bar there is the true range of that day. And then the cyan line is the average true range. And this one down here is rock volatility, is what it's called. Which basically it just kind of shows you a measure of how volatile is it to the upside versus the downside. So it makes a pretty good oscillator to determine momentum, right? You can see right here when it shifted, right about where momentum strategies would start getting in. It also does a pretty good job of telling you when you get up into this area, oh, hey, maybe we don't want to be in that anymore. I think there's this other little line that I'm not showing. Indicators, rock volatility, lines. No, only the 0 line. There's another line that's like inside the indicator that's not being printed, I guess. One man's gold is another man's... Yeah, I guess. Anyways, but I'm really kind of more like looking at where some technical analysis stuff that I know of might start triggering people and trying to game them based on what I know about the actual market. So for me in this situation, you know, CTAs might not get involved here yet, but I want to get involved because I know what just changed. I know that what changed has a good chance to lead us much lower. So I'm going to wait for them to all figure it out and, you know, ride their momentum. That's the idea, at least. Anyways, it's time for me to get going. I'm over. So I will see you guys on tomorrow. And in the meantime, stay excellent, team.